Welcome to Quickshots.
Yo. Welcome to Quickshots, where we answer your questions in a really short amount of time. Huzzy, congratulations, because you get 2 questions this week, my good man.
Bonus. Woohoo.
Yeah, I know. You look like you're on point. You feel like you're on point, and you are the man for the big cues of the day. This one's from Tom. Very relevant. Should I look at refinancing now before my variable rate increases because interest rates are increasing?
Good question, Tom. We talked about interest rates a fair bit in the main podcast this week. The fact that they are going up, definitely now is a very, very important time for you to be looking around at your interest rates. It might not necessarily involve refinancing. It may not be the right time to fix the rates either. But what we are seeing is the Reserve Bank say today that the average rate that a home owner is paying today is about 2.86% as a variable rate. And they compare that with the fact that the average new customer that takes a loan out with the bank is paying about 2.4%. So near enough to 0.5%, what we call the loyalty tax that is being charged to existing customers. So therefore, what we can do about it is we've just got to shop around. By all means, though, you might just see what other banks are offering and then give your current bank the ability to match it. They will often shave a few points off your interest rate because it will be important as interest rates increase to try and keep your rates as low as possible. So hopefully that helps you out there, Tom. I've got Katie, and this is a very good question. And the question is, I've got parents, and there'd be a lot of people in this situation at the moment who's, in Katie's instance, the home is unencumbered, even if the home had little to no debt. Her parents want to help her out. What's the best way that they could do that and structure the parents helping Katie out?
There's actually so many ways that you can cut the snake. I think the first place to start, though, is if you are a kid, so you could be any age, so this isn't just for youngins, but if you're a kid and you're working, right, I think it's important to start by knowing what you can borrow based on your current income because, if it's sort of lower or you're at uni or something, that may affect what you can buy. And it will also tell you how to sort of reverse engineer it, how much you need from your parents to help you out. And also on top of that, if you're a first home buyer, you could also get the incentives, right? So if you only need sort of quite a minimal amount from your parents, it may decide how they help you with the equity they've got in their home. I did make a list of a couple of things and I'll sort of just mention them so that I guess our listeners can go and investigate these things. But there's a few things you can do without going into a lot of detail. Your parents can get what's called a reverse mortgage. They can do a equity release on their home. So if they own it unencumbered, it means going to the bank there and taking some equity out. There's actually a scheme called the Home Equity Access Scheme that parents can look into. Alternatively, if they are looking at downsizing or as Knight Frank have tokened right sizing, they could share in the proceeds of the family home. So give you some cold hard cash and maybe you can figure out a way to cold hard cash. Maybe you can figure out how to pay them back, if you like, over a certain amount of time so that you can honour that with your parents and help them out. And the last thing is your parents can guarantee your loan. So that works in a couple of different ways, but essentially they'll guarantee your loan should you default or they'll use their own home as security to help you buy your own home too. So many different ways to do it. But I think it's a great conversation to be having with your parents, not necessarily mum and dad chuck us some coin. But hey, how can we do this as a family? And, maybe how can your parents share in the equity or, the eventual home that you buy? So there are a few different ways. And
Good
also, because you and I, thank you. And you and I also talked about the other week, and I put it on our Instagram too. A couple of ex-CEOs of big banks went and started 2BE, which is a sort of bank that mum and dad can go to in order to help their kids. So that is also another option there. All right, last one for you, you lucky man. It's from Mandeep. Very simple but effective. What insurance do I need on my property as an owner-occupier? So a guy who lives in his own home.
Well, you need
Or
building
lady.
insurance, but you need building insurance whether you're an owner-occupier or an investor. What you won't need as an owner-occupier is what they call landlord insurance. That's just for investors. But what you will probably need instead of, or in addition to your building insurance, is contents insurance. You've probably got furniture and the like that if anything were to happen to them, they're not covered by the building insurance. You've got to get a separate package for that. And then within the home insurance, there's things like motor burnout. So it's like, if anything that's got a motor or an engine, were to hit the wall. So look, the main thing though, Mandeep, would be to make sure that when you're ordering your insurance, you put all the details in there in terms of how big the house is, the replaceable value, whether you've got a pool, al fresco, timber floorboards. So it's probably more to do with you've got to be a little bit more specific when it comes to your own home in terms of what's in the home, because you're going to want to largely replace what was in your home, whereas when you're just investing, you're probably happy to just sort of go with something fairly vanilla. So the home insurance, or building insurance rather, and the contents, Mandeep, they're the main ones if you're a homeowner.
Got to say, insurance sucks, but if you ever need it, it is well bloody worth it. Ain't that the truth?
Yeah. Can't put a price on a good night's sleep.
Ooh, I like it. Cuzzy, well done answering 2 questions. You have won the Gold Star of the Week, so I want to congratulate you on that. And you've got somewhere to be, and I've got a lot of pretending to be busy to do, so that's a full-time job.
Well, and you excel at it.
Silver platter stuff. Guys, thank you so much for listening to Quick Shots, and we will catch you next week, dog.
See you guys.
Bye. Thanks for listening to another episode of The Double Shot with your favourite cousins, Alex and James Fitzgerald. If you've got a burning question or something we absolutely need to talk about on the pod, please write to us. Both of our emails are in the show notes. For little real estate tidbits and a little bit of banter, okay, a lot of banter, you can follow us on the gram. Our handle is thedoubleshot.podcast. That, my friends, is thedoubleshot.podcast. Until next time, think of us when you sit back and sip your next double shot.